Welcome back to the Pro Ticker Podcast, your Monday morning edition covering major financial magazine headlines, everyone. Today, we're doing one of our deep dives into the most significant financial and economic developments, really from just the past few days. You've probably seen the headlines, stock futures dipping, global markets looking a bit mixed. But what's really going on underneath? Our mission here is simple. Cut through that noise, pull out the key insights, and, connect the dots for you, give you that shortcut to being truly well-informed.
Absolutely. And for this deep dive, we've gathered insights from some key reports, top financial publications, and newswires. We're looking at recent stuff from Yahoo Finance, CNBC, Reuters, Bloomberg, covering events basically from Sunday, July 6th, and this morning, Monday, July 7th, 2025.
Okay, so quite a bit to cover then. We'll be unpacking everything from the kind of speculative buzz in the U.S. market, escalating global trade tensions, shifts in energy, and some really dramatic moves in the tech world, too.
Definitely some big stories there.
All right, let's get started. Let's kick things off right here in the U.S. The stock market just keeps hitting new highs in 2025. Yeah, mostly driven by those mega cap stocks. But what's genuinely behind this rally? Is it like solid economic health, or is something else at play?
It's a really interesting picture. What reports from, say, Yahoo Finance are showing is a clear surge in what they call speculative trades. There's this growing investor appetite for risk, even with all the economic uncertainty sort of lurking around.
Any specific examples jumping out?
Oh, yeah. Take Palantir, PLTR. Often gets called the quintessential meme stock, right? Where online hype matters maybe more than fundamentals sometimes. It's up a massive 78.80% just this year.
78%. Wow.
Yeah. And then there's Supermicrocomputer, SMCI.
Yeah.
Back in April, it was actually the most heavily shorted stock in the S&P 500.
Heavily shorted, and now?
Now it's up 62.22% year to date.
Yeah.
I mean, these aren't typically the kind of gains you see driven just by fundamental analysis.
Sounds like a wild ride. And you mentioned meme stocks. Liz Ann Saunders at Charles Schwab, she commented on this, didn't she? On Yahoo Finance's opening bid.
She did. She said, and I quote, "Retail traders' fingerprints are all over it." She noted the rally's strength is coming from, well, retail favorites or meme stocks, unprofitable tech, and even what she called a lower quality tilt that's lifting penny stocks.
And she also expressed some worry, right, about complacency.
Exactly. She said some complacency has crept in. That's a clear note of caution.
So this points towards that idea of a disconnect from fundamentals.
Absolutely. Some analysts are really highlighting that. Chad Morganlander at Washington Crossing Advisors, he talked to Yahoo Finance about the gamification of the financial markets. He said it's something we've seen over the last 5 years, and he voiced considerable concern about all this speculation. His warning was pretty stark. Buyer beware.
Buyer beware. So if it is this sort of gamification, what does that mean for investors trying to figure out if the market's actually healthy? Does this change how we should think about it?
It definitely raises big questions. Steve Sosnick, over at Interactive Brokers, he wrote in a client note that MOMO and FOMO, momentum and fear of missing out, they are likely to dominate until proven otherwise. He's basically saying many investors chasing these leaders aren't using traditional valuation metrics. For now, he says, fundamentals don't matter.
For now, but they eventually do, right?
That's the crucial caveat, he added. Ultimately, fundamentals do matter, he said. But that reconciliation, it can come months or years later. He also made this interesting point, kind of provocative. Whatever hasn't killed this market made it stronger. But, just because it's been resilient doesn't mean it's safe going forward.
So it sounds like understanding maybe the psychology is as important as the numbers right now.
That seems to be a key takeaway, yeah. Human behavior, collective sentiment, speed of information, maybe just as crucial as balance sheets in this environment.
Okay, while the U.S. market deals with that, there's this huge external factor looming. Trade tensions, tariffs. That initial July 9th deadline for the tariff pause just changed, didn't it? What's the latest there?
Yeah, that shifted. CNBC and Yahoo Finance reported on this. President Trump and Treasury Secretary Scott Bessent confirmed tariffs are now set to go into effect on August 1st.
August 1st, not July 9th.
Right. And Bessent, speaking on CNN, CNBC picked this up, he clarified it's not really a new deadline. It's more about offering more time to renegotiate.
Yeah.
He did warn, though, that tariffs would boomerang back to April levels if talks don't progress.
And wasn't there another announcement about tariffs? Something related to BRICS?
Yes, indeed. Separate announcement, also covered by CNBC and Yahoo Finance. President Trump threatened an additional 10% tariff on countries aligning with what he called anti-American policies of BRICS. He said no exceptions.
And this came just as BRICS was meeting.
Exactly. The timing was notable. The BRICS group, Brazil, Russia, India, China, South Africa, plus the newer members like Saudi Arabia, Egypt, UAE, Ethiopia, Indonesia, Iran, they met in Rio. And their joint statement, as highlighted by CNBC, criticized without naming the U.S. unjustified unilateral protectionist measures, including the indiscriminate increase of reciprocal tariffs.
So a clear response there. How did the markets take all this tariff news swirling around?
Well, Bloomberg and CNBC showed U.S. stock futures dipped, Asia-Pacific markets were mixed, Japan's Nikkei 225, Australia's S&P S200, they fell. South Korea's Kospi actually rose. Europe was mixed too.
And commodities.
Gold fell,
Huh.
partly dollar strength, partly just the trade uncertainty. And industrial metals like copper, aluminum, they extended losses. It really shows how this injects uncertainty everywhere.
Okay, so with all these threats and negotiations, what is actually happening behind the scenes? Are any deals being made?
It's a real patchwork, based on reports from Bloomberg and Yahoo Finance. The EU, for instance, seems okay with a 10% universal tariff, but they're pushing hard for exemptions.
For specific sectors?
Yeah, things like pharmaceuticals, alcohol, semiconductors, commercial aircraft. Those talks are ongoing. China, interestingly, got some relief. Eased U.S. export restrictions on chip design software and ethane. A bit of a calming since their May agreement.
But China also retaliated, didn't they?
They did. They imposed their own anti-dumping duties on European brandy, pretty steep ones, 27.7% to 34.9%. And they banned European medical device companies from selling to the Chinese government over a certain budget, about $6.28 million.
Yeah.
A clear counter to EU restrictions.
Tit for tat, definitely. What about others, like Vietnam or South Korea?
Vietnam struck a deal. 20% tariff on its imports, but a much steeper 40% on transshipped goods.
Ah, aimed at Chinese goods sneaking through.
Precisely. And that 40% might give us a hint about where tariffs on China could eventually settle. South Korea is asking for an extension on the deadline, suggesting manufacturing partnerships. And Canada actually scrapped its digital services tax, so trade talks there have resumed.
So it's a really complex web. And for you listening, how does this impact things? Well, these moves, these counter moves, they ripple through supply chains. It could easily affect the price of goods you buy.
Absolutely.
Okay, let's shift gears to energy. Commodities also feeling the pressure. What's behind the recent dip in oil prices?
Yeah, oil took a hit. According to CNBC and Yahoo Finance, it came after OPEC, plus, that includes Russia and Saudi Arabia. They agreed to hike production more than expected.
More than expected.
Right. They're unwinding those voluntary cuts by 548,000 barrels per day. The market was thinking maybe more like 411,000. Vishnu Varathan at Mizuho Securities, quoted by CNBC, warned that if these hikes stick, the stage is set for an oil surplus by the end of the year. That could push prices down further.
And how are the big energy companies handling this volatility?
Like
Shell.
it's impacting them directly. Bloomberg reported Shell put out a notice saying its Q2 results will be significantly lower. The reason? Weaker results from its huge oil and gas trading operation.
That's unusual for Shell's trading arm, isn't it?
Very unusual. That division usually boosts profits and apparently hasn't lost money in a whole decade. But Shell said the geopolitically driven volatility in Q2 is just too challenging. It shows even the giants are vulnerable to these market swings. And for you, what does this volatility mean for, say, gas prices down the line or maybe the stability of energy investments? It's a key question.
All right, let's pivot to tech. Some major headlines around Elon Musk and Tesla. Quite a dramatic few days. What's been happening?
Oh, definitely eventful. According to CNBC, Elon Musk announced on X, formerly Twitter, that he's forming a new U.S. political party.
A new party.
Yeah, the America Party. He said the aim is to get influence in just a few key Senate and House seats to be deciding votes.
And how did the market, specifically Tesla investors, react to that?
Not well. Tesla shares dropped around 7% in pre-market trading Monday. CNBC and Reuters reported this. Investor concern seems to be about his focus shifting deeper into politics. Dan Ives at Wedbush, quoted in those reports, put it bluntly, Musk, diving deeper into politics, is exactly the opposite direction that Tesla investor shareholders want him to take.
And this is happening alongside a very public spat between Musk and President Trump.
Exactly. A dramatic falling out, as CNBC and Yahoo Finance described it. The core issue seems to be Trump's big spending and tax bill. Musk criticized it for increasing the debt and, crucially for Tesla, ending the EV tax credit from September 1st.
And Trump's response?
Trump called Musk ridiculous and completely off the rails for starting a new party. He also claimed he'd warned Musk about ending the EV tax credit during his campaign. So, quite the public feud.
Beyond the politics, what are the direct business impacts for Tesla from all this?
Well, according to Yahoo Finance, losing that $7,500 EV tax credit is a big deal. Plus, there's risk to over $2 billion in profit Tesla makes from regulatory credits. William Blair analyst Jed Dorsheimer called it a potential direct hit to profitability. On top of that, Tesla's Q2 car deliveries actually fell 14% year-on-year. They missed expectations. So, yeah, significant headwinds.
It really makes you think, doesn't it? How much can a CEO's personal political actions affect their company's bottom line? And what does that mean for you as an investor or even just a consumer?
It's a critical question in today's landscape.
Okay, shifting from one tech giant's challenges to another surprising success, Xiaomi. They seem to have pulled off what Apple couldn't in the car market.
It's a fascinating story detailed by Bloomberg. Xiaomi is being called the only tech company to have successfully diversified into car making. Quite a contrast to Apple, spending, $10 billion over a decade and then pulling the plug last year.
So what was Xiaomi's secret sauce? How did they manage it?
Several key things, according to Bloomberg. First, staggering demand. Their new SUV got over 289,000 orders in just 1 hour.
An hour. Incredible.
Yeah. Second, they launched into China's very ripe EV market state, subsidies, existing charging network, established supply chain, all that helped. Third, the founder, Li Jun. His charisma, brand recognition, and ecosystem were apparently crucial.
So leadership played a big role.
A huge role. Bloomberg notes he learned from other Chinese car makers, hired top talent aggressively like Hu Xingyan from Geely, and very importantly, he focused on building a self-controlled supply chain and their own factory. He learned lessons from past issues with smartphone components.
And their customer base.
Massively important. They're loyal Mi fans. Almost half the customers bought the SU7 without even comparing it to other cars. So it's really a mix. Timing, market conditions, leadership, supply chain control, and that deep brand loyalty. It shows maybe it's not just about R&D spend.
But it can't have been all smooth sailing, surely.
No, there have been bumps. Bloomberg mentions copycat allegations, and sadly there was a fatal accident involving the SU7, which led to regulators stepping in regarding advanced driver assistance promotion. Still, despite that, the EV division is actually expected to be profitable in the second half of this year, 2025.
And they have bigger ambitions.
Oh yeah, aiming for 350,000 units in 2025. And they're looking globally from 2027, with R&D already in Munich. Potential sales in Europe, despite the tariffs we talked about.
Interesting. Okay, one last tech story. The AI chip race. There's a new challenger to NVIDIA making moves in Europe.
That's right. A startup called Grok. CNBC reported they're expanding, setting up their first European data center in Helsinki, Finland, partnering with Equinix.
Grok. What's their angle? How are they different from NVIDIA?
Their focus is different. Grok designs language processing units, or LPUs. They're specifically for inferencing, that's using AI models with live data, making predictions or interpretations. NVIDIA dominates the training part of AI. Grok is going after the inference market, which they see as high volume, low margin.
And they have an edge there.
They believe so. Their chips use components that aren't as supply constrained as NVIDIA's high bandwidth memory. And speed of deployment seems key. Their CEO told CNBC they decided on the Helsinki Center just 4 weeks ago and expect to be handling traffic by the end of this week.
4 weeks? That's incredibly fast.
It is. And this plays right into that European push for sovereign AI, doesn't it?
How so?
Well, European politicians want AI infrastructure, data centers, located in Europe, for speed, for control, less reliance on other countries. Grok's move supports that directly. It really begs the question for all of us, how will this growing competition in AI chips shape AI services and innovation worldwide? Definitely a space to watch.
Okay, before we wrap up, just a quick mention of another deal, an energy one between Indonesia and the U.S.
Yes. Reuters reported on an expected memorandum of understanding worth about $34 billion. It involves big names. Indonesia's state energy firm Pertamina, plus ExxonMobil and Chevron from the U.S. side. It just highlights that even with all the global tensions and trade friction we've discussed, major international business collaboration, especially in energy, is still happening.
So bringing our deep dive to a close today, we've covered a lot of ground, from these kind of speculative highs in the market to the shifting sands of global trade, tariffs, counter-tariffs, and then this really close link between tech innovation and, well, political drama.
It's a complex picture. Each piece matters on its own, but seeing them together really shows how interconnected everything is.
It does, and it leaves us with maybe a final thought for you, the listener, to consider. In a world where markets seem increasingly driven by MOMO and FOMO, like Sosnick said, and where a tweet or a political speech can instantly move stocks and trade, how should we reevaluate our old ideas about economic stability or investment strategy?
Yeah, is buyer beware, that warning from Morganlander, is that the new normal for everything? Or does fundamental value, always find its way back eventually?
Yeah. Something to definitely mull over. We hope this deep dive has given you a clearer, more informed view on the latest headlines and their connections. We'll see you all tomorrow morning with new headlines from major financial magazines.